What's up, everyone? It's Caddy with MoneyVest. So in this video, we are going to be talking about the September seasonality, right? So it's almost over. We are heading into the last week of September. FOMC is out of the way. Inflation's out of the way. Unemployment's out of the way. So we don't have anything left. Earnings are not due for another few weeks. October is going to be here. So fourth quarter is just about getting started in less than 10 days. So my goal in this video is to help you prepare for what is potentially going to take place and what my plan is moving forward. So hope you guys enjoyed this video and find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. I would really appreciate it. And the links to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the buy and sell alerts, options alerts, trade ideas. Everything's going to be included. There is a 16% annual discount available for 7 more days, and after that the investor early bird tier will be closed off for good. So again, link's going to be down below if you want to take advantage of that, and of course be a part of our MoneyVest community. So this right here is what September's look like. S&P 500 is down a little bit over, let's see, so NASDAQ's down over 5.87%. We have the NASDAQ 100 down over 5.16%, and the S&P 500's down over 4% in September alone. So it's obviously been a little bit of a brutal month. Of course, a lot of individual tech stocks are down pretty aggressively. That goes to show with the NASDAQ being down over 5.87%. If you come over to the charts, Amazon's down over 6.4%. Apple here is down a little bit over 6.9, almost 7%. Tesla's kind of held up a little bit better. It's only down 5%, which is actually quite comparable to that of the NASDAQ and the S&P 500. But of course, Nvidia is down 3 times more than Tesla, down over 15% in the month of September. Advanced Micro Devices is not small either, down over 9%. Microsoft here down a little bit over 3.2, so held up very well. And Google here is down a little bit over 4.4% as well. So that's your big tech. That's your Magnificent 7. Netflix is down over 12.4, and Meta has also held up really well. In fact, Meta is actually up in the month of September. So Meta is surprisingly outperformed all of the Magnificent 7 other significant stocks here that are down. And of course, it's outperforming the S&P and the NASDAQ and the Dow Jones as well. Speaking of the Dow, it is down a little bit over 758 points, down over 2% in the month of September. So, what is it going to come down to? We gotta call up our bank, and we gotta be ready for the cash. Cash is going to be king here. Cash is going to be important. Okay, that's what I'm doing. That's what I've been preparing for, because over the next week and over the next first couple of weeks of October, I think that's going to be a good window to really look at individual stocks and start dollar cost averaging. I'm going to be a little bit more heavy in aggressively sort of like buying over the next weeks because of the opportunity that presents itself in the markets coming down, individual stocks also rolling over, and going over some seasonality here, which if you take a look since 1928 to now, you'll notice that the September month has been the most brutal, with only 44.7% probability for the markets to be higher. So there was no doubt that their September seasonality was going to work like clockwork here, down over 1% on average. And that's exactly what we are witnessing, with so many red candles and of course markets rolling over, individual stocks coming down. But this video is not about what's already happened. This video is about the future, what is going to happen. Now, just because, this has happened before in terms of seasonality, does not mean that the markets are going to be very strong in the fourth quarter. But I just want to address the seasonality aspect because that's how market participants think. That's how investors basically think. At the end of the day, it all comes down to valuation and risk and reward, right? Doesn't matter the seasonality, right? You can buy, if you find great companies at undervalued levels in December when the market's at an all-time high, so be it. If you find overvalued companies, in the middle of September, right, when everybody's selling off, every market's selling off, and you think that company's overvalued, that's totally fine too. And that if that means selling that stock, that's completely fine. So, in other words, what I'm saying is seasonality. Yes, it's good to look at that seasonality and be a little bit more tactical in your approach. But at the end of the day, it's all really going to come down to risk and reward, right? If there is better opportunities, regardless of where we are in the year, what year it is, what month it is, if there's opportunity, we're going to take advantage. And if there's not, we're going to sit back, we're going to hold cash, and we're going to be more, aware of where the deals are, right? Of that risk and reward. So, of course, in this case, in 2023, it just happens to be that September seasonality is playing out and stocks are coming down to our, they're coming down closer and closer to our fair values. Of course, they're nowhere near close to that level yet, but we are being patient, we're disciplined, and of course, allowing for the prices to come to us. It just happens to be that way because September seasonality is playing out as it's supposed to. So, with that being in mind, again, we know that, fourth quarter is almost always very strong. You can see the, October, 60% probability that we're going to be higher. November, over 60% probability that we're going to be green. And December is usually the best month for the market. Not from a percentage standpoint, but from a probability of profitable standpoint, meaning that 74.5% probability that markets are going to be green in the month of December. Here's more on the global markets, and I believe this is going back as far as 50 years, not as far as 1928, which is almost 100 years, but this is going back as far as 50 years, and you can see the S&P 500, the NASDAQ 100, the Dow Jones, the DAX, the Euro stocks, the FTSE, and the Nikkei, and almost all of them are red in the 9th month, which is September, right? 9th month is red for every single index out there on a seasonality perspective over the last 50 years. NASDAQ more specifically down about 0.5%, S&P down 0.8%, the Dow is down almost 1%, the DAX 1.7%, and Euro stocks down over 1.6%. But you'll notice that every single one of them is up by over 1% in December. In November, they're all up at least 1%, if not more than 1%, except for FTSE 100, which is slightly down, under 1%, but still positive. But of course, fourth quarter, 10, 11, 12, which is October, November, December, green for every single index except for Nikkei, which is slightly lower in October on a seasonality perspective. But bottom line is they're all green and they're all up in the fourth quarter. This right here was actually something of another very interesting chart that was put together. And this basically goes over the S&P 500 outperformance in odd years versus even years versus political years. So I wanted to show the seasonality as well because it was quite interesting and the value of that $100 and what that's going to look like in these different circumstances. So right now, obviously, we're in an odd year, right? 2023. So 113.1, that's a 13.1% gain on average in odd years for S&P 500. And this year, well, guess what? The market is up. So if you come over to S&P 500, it is surprisingly up over 12.11%. So almost identical to what this number suggests. It's 1 percentage point off from this average, right, on odd years. Now, when it comes to even years, when we're going into 2024, the average gain is far lower. It's going to be just under 4%. However, it is also a president election year. That's going to be that yellow line, and that's a little bit higher at 107.2. So it's a 7.2% increase on average during presidential election years. And of course, so it's in a combination of, even years. So even years are usually presidential election years. So we are looking at 107.2 because that's separated out compared to the even years, which are taken into account when there's not presidential elections, right? So for example, 2022 or 2026, for example. So that 107.2, that's really what, in my opinion, on average, that's what it could look like next year. Again, there's a lot of macroeconomic headwinds around the economy, right? There's uncertainty around inflation, uncertainty around interest rates, uncertainty around the economic growth, and the respect to unemployment, right? The labor market's very, very tight. So we're gonna find out how that ends up playing out in 2024. Now, this right here is another chart. So let's just talk about October, November, December, right? And you can see the NASDAQ 100 tends to perform better than the S&P 500 during these seasonality times. So in other words, technology stocks is what we're really looking at here. And you can see that from July and October, July, August, September, basically these right here are the timings when the markets really do continue to sell off. And the reason why I mentioned the first couple weeks of October as well, because as you can see that October is right over here, and it continues to sell off, right? This is the entire sell-off going into September all the way through like first couple weeks of October before it really starts to rip all the way to the upside in remaining of October, November, and December, right? That's the NASDAQ 100, or excuse me, that's the S&P 500 for you. The NASDAQ, almost identical chart, not as much involvement in October, But you can see that in August and September, these are the 2 months over here, you can see the markets again continue to sell off in September as well. A little bit kind of rippling into October, but it just absolutely rips in October, November, December, remainder of the year in Q4. It tends to really perform much better from a seasonality perspective. So, taking into account that and what we know, and this is another chart that I wanted to go over, which is during U.S. economic expansions. So this is a different seasonality chart, which is basically going over when the U.S. economy is expanding. There's an 87% probability that we see a positive return, and there's a 63% probability of a return of 10% or greater, and a 31% probability that we see a return of 20% or higher. So obviously 87% is a very, very high number, and that goes to show that yes, economy has grown this year in 2023. It's been very strong, and as a result, the markets have also seen a positive return. So bottom line is this. Call the bank, get the cash ready, and that's what I'm doing. Just basically having a lot of cash on the sidelines, and we'll be ready to dollar cost average. All the alerts will be posted down in the Discord. So, there's a watch list, there's a shopping list that we have on Patreon. There's 20 stocks that I'm really excited about in buying and dollar cost averaging. And of course, September seasonality, if that continues last week of the Q3 here, and if you continue to see that sell off, there's going to be more deals, there's going to be more opportunities, and we are going to be ready to dollar cost average and of course sell some puts. So I hope you guys enjoyed this video. Let me know in the comment section down below, what do you think about the fourth quarter this year, and is that going to be something very similar to what we have witnessed with the seasonality charts, or if you believe that it's going to be much worse than what we have witnessed with the charts and what the data suggest. As always, happy investing. Again, link's going to be down below. 16% annual discount to be a part of our Discord. As always, happy investing. I'll see you all in the next video.